What is up, ladies and gentlemen? So, we got the job report today. As you guys know, I don't believe in any of these numbers. I just believe they're tools to utilize as to why they're moving the markets the way they are. That's just my opinion. Doesn't have to be yours. Definitely stick around for this whole video. We're going to take a look at the bubble pop pattern, which I still believe to be playing out. I'm going to tell you why. We're also going to look at the possibility of one more big run up. Although I don't think it's going to happen, there is a possibility of it, but we'll take a look at both directions, where I think it's headed, and what to watch for. So definitely stick around for the whole video. We're also going to take a look at the 10-year yield. We're going to take a look at a chart I made over a year ago and see how that's playing out so far. As most of you guys know, I've been saying for a long time that I believe it's a very good possibility that the U.S. mortgage rates get well above 10% before this bear market's over. I do believe we are still in a bear market. We just had a bear market rally. That's it. Again, let me know in the comments what you think, but guys, stick around for the whole video. We're going to look at the DXY, Dow, NASDAQ, and S&P, which I believe is the nail in the coffin. I'll tell you where to watch for a close to confirm that. That would confirm that the markets are in serious trouble, and then we'll take a look at the targets from there. So definitely stick around for the whole video. Make sure before we begin, you guys take a second out, scroll down, smash that thumbs up, and let's get into it. So as you guys know, I showed you guys back in the 2007 strike back here. What we're going to take a look at here is market patterns. We don't care about the news. I've just put up the UAW strike as what I was talking about. Like, the same stuff starts happening. They start claiming the same things. And most of you know, or I would hope that most of you know, that the unions are in cahoots with politicians. So the people that run the unions just take orders from politicians, in my opinion. Could I be wrong? Absolutely. But from what I've seen, that's what it is. So, but as you can see, big market event, and this is the very worst case scenario, down to 13 to 16,000. Although I don't think it'll go that low, it is definitely a possibility. Let's take a look at Bitcoin compared to the Amazon.com bubble. Now, as I'm showing you this bubble, keep in mind, look at the market cheat sheet. It will show you the same thing. As a matter of fact, let's pull that up right now. As you can see, the market cheat sheet, right? You have your big run up, then you have your first crash down, lower high, and then coming down to your low here, then you get a nice rally, usually 100% rally, just like we got in Bitcoin, before a continuation to the downside, which will get you to your true bottom. This, in the market cheat sheet, you actually have two, and I'll show you charts where that's happened. But so let's look at the Amazon compared to .com bubble, right? I believe, if you remember back in the .com bubble, which a lot of you guys won't, but a lot of you people that were around back then remember that you could buy anything and get rich. People were super excited about all the new .coms, and they just got washed out in this whole thing. Now, we talked about 100% rally, right? And that's exactly what we got here. We also had the same thing here. There were two 100% rallies. Let's take a measured move here. And make sure you stick around, guys, because also we're going to look at BNB and XRP at the end. All these charts are playing out to the T. I know everyone wants to act like Bitcoin's going to change the world, which it may. I'm not against Bitcoin at all. Although I don't believe many alts are going to make it. There's still trading opportunities within them. Let's take a look at... let's get our tools out here. I don't know why I can't find... Let's get... Where is it at here? What am I doing? Okay, here we go. Price range. So let's go from this low here to this high up here. We go there. That was a 77% rally, right? If we go from this low down here to this high here, what was that? It looks small, but it was a 100% rally, right? None of these bubbles ever got to a 50% retracement. So Bitcoin's 50% retracement would be where? If this was broken, then I would consider that maybe that was the bottom. But as you guys know, I haven't changed my stance on that, and I won't unless there's some confirmation. But let's look at a 50%, right? What would that be? 50% would be about 34,000. We would have to break above 34.2 actually. But nevertheless, we never got 50% of our rally back, right? And bubbles always return to where they began. And as you can see in my VRVP right here, right? Here was where it began. Same thing over here. What does it do? It drops below that. So there's still a possibility we drop below this. But as you guys know, I'm looking for 3,500 to 9,700 for the true bottom after what we had here, which was the false bottom. Now, 9,700 is right here at this high volume node. We're going to take a look at some other bubbles too. But it usually goes below, as you can see right here. So you can see the high volume nodes are almost identical in how the market is playing out. So down here, you actually got a little below this one, and that down here would be around that 3,500. That's why I do think it's still possible we get that low, but nevertheless, I'm looking for 35 to 9,700. Let's look at Nintendo, as you can see. And mind you, all these have been over 20 years and still never reached their all-time high. The only one that did was Amazon, and it took over 10 years to reach its all-time high again. But here's Nintendo. You can see 100% rally and then come down to true low. And again, look at the high volume node right here, right? Same thing as over here. They are almost identical. Now, when you see more up here that you don't see here, that's because it's got all of these candles in here too. Nevertheless, still looking for lower lows, guys. Here's another one. You can see we had a few false bottoms here before making the true false bottom. Now, it could turn out like any one of these. Obviously, nothing plays exact, right? But it's still been 20 years and Sony hasn't made its all-time high. And if you look, here's the high volume node. We went below it, just like in all the other bubble pops. DXY. So DXY, we went below our top trend line here. I don't think we're going to go down much lower, but remember, we've said 105 is about the area to watch for. If it breaks that, then maybe things turn around. But otherwise, this is just a correction from the upside before continuing much, much higher. As you guys know, I have way higher targets up here, way higher targets, anywhere from 122 all the way up to like 180. Now, why do I say that goes that high? Because when people get out of the markets, when smart money, including government officials and whatever, when they get out of the markets, they get into the dollar. The dollar spikes super high, stocks and commodities, everything else goes low. Then they get back in with the high dollar for the cheap prices on everything. Dollar goes back down, markets pump. Over and over. This happens over and over. This is the big one, though. I think this could be like the Great Depression type style, right? Let's look at, okay, so let's talk about the NASDAQ. NASDAQ broke our high right here, right? Or broke our resistance support. And why I say S&P is the final nail in the coffin. We'll see if that opens and closes the daily below. We need that to confirm. So it'll probably be Monday, but we'll take a look at it. But you can see it broke here. We would have to get back above this 15,000 and hold on NASDAQ to invalidate this. But so far, our measured move, and this could take time, guys, but is around 12,500, right? Looking at the Dow broke its support right here. Everything's getting a little bit of a comeback today. We'll see how the markets close, but either way, we're getting so close to a massive crash, right? We made our highs back here in 2022 for the traditional markets, 2021 for Bitcoin, and nothing but a bear market rally here before a continuation to the downside. As you guys know, my big target here is about 27.7, although we could go much lower, depending on how bad this gets. Let's look at the S&P. So here we are in the S&P. We broke our support, but now we've just been playing on it, right? See where we're at now. So a daily close below this, let's get this a little more accurate. Below 42.55-ish. A daily close below there, and it's probably going to be a really bad next week for traditionals, right? We do have a gap up here. Will that fill? Possibly. We have one up here too. But so far we're getting rejected on that trend line, right? And this trend line is just a rising channel, and a measured move from the break of that rising channel, you would take this, bring it down to where it broke, and that gets us that 37.35, 37.50 range, right? But if this breaks, we have another target of 92.9, and let's take a look at the worst case scenario, right? We're going to go from this high with our Fibonacci extension, right, down to the low, back up to this high here. As you can see, this gets us about to the golden pocket at that 31.35, but I do believe we'll get at least a 1-to-1 extension. That's 32.99, right, before going up. But if this 1-to-1 extension breaks, your next stop is the 1.272, which is 29.23. And then we have this legacy trend line, right? Whatever you want to call it. Long-term trend line from back in 09, right? Touch. If we come back to touch that, it could be somewhere between 27 and 3,000. Depending on how long it would take to get there. But then we have our 1.618 at 28.40, which is also a good possibility. So just be aware of that, and let's take a look at 10-year yields. I made this chart way back here before we broke, back in the beginning of 22. So it's been well over a year, almost 2 years. And I talked about breaking this trend line here, and this was just a measured move, right, of the widest point of the broadening wedge, which we broke, and that gives us this target of 7%, a little over 7%, right in that range, right? Real close anyways. I do think we're going to eventually get up there. Does that mean we shoot up in a day? Absolutely not. You can see how long this is taking. But I do believe we will have some big moves to the upside. And again, like I've been saying, I believe U.S. mortgage rates will be well above 10% before these markets bottom. Let's take a look at our sponsor, and then we'll get into some smaller time frames of Bitcoin. We'll take a look at BNB. We'll take a look at XRP. We'll take a look at Tesla. So definitely stick around for that. But if you guys are interested in trading, definitely check out Prime XBT. Link is down below. They do support and sponsor this channel. They do give me promo codes you can use to get you bonuses. Savvy25 will get you 25% off of your trading fees. Even if you already have a Prime account, you can go to your promo section and put it in. And Savvy50 will get you up to a $7,000 bonus to use towards your margin. Here they are.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.
One of the best features on Prime, in my opinion, is you can trade crypto, Forex, gold, silver, oil, S&P, copper, natural gas, everything, all from one exchange. Definitely check them out if you haven't already. Let's get into it. So this is, okay, if we have a big, huge, massive rally up, which will just be like, if you guys watched my videos back here on March 24th, 2021, we called this all from March 24th to where it topped out. About a month ahead of time, called the exact top at 64,000, and then continuation of the downside. And we've seen that right here, right? Let's take a look at where we're at now. If we were able, so there is the possibility we get there, but I'm also going to show you here in a couple charts that I think we've already topped out. But this is something to watch for, and if we do get up to these levels, would be a great time to short the crap out of it if we get up that high. Just like we were looking for 31.5 and 31.8, and I told you guys way back in the beginning of the year that I would short at 31.5 big time, and you know, we know what happened there. So looking at this, let's bring up our schematic, and here you can see same type deal again if we were to get up to these levels. So that's something to watch for. We also have another schematic showing the same thing, wick-off distribution, right, with a little shorter high. So anywhere here from between 29 and 32.5, 33, would be still distribution phase, in my opinion. I don't know why in the world my charts keep doing that. It's getting real stressful. Anyways, let's take a look at that. We'll bring that schematic up. You can see it. That one would be this one right here, if that was to play out. Now, those are your bullish cases, which are still macro bearish, right? Let's take a look at what I've been talking about here. You can see we had higher highs right here. We look at our trend line, this dotted trend line, and to where this came, we never made it back up. I do believe we could be seeing the same thing. Now, this gets invalidated if you come up and break this trend line at 30,000, whatever range. But as you can see here, it never did. And this is almost just like a fractal. We can also see the hidden bearish divergence here. Higher highs in the RSI, lower highs in the price action. Come over here, higher highs in the RSI, lower highs in the price action. Same type pattern, guys. Like I said, I don't care about the news. We study strictly the charts here. And so far, it has made me financially free, and it can you too if you just pay attention. Start diving into the charts, learning the charts, and letting the news do what it does without paying attention to it, because it will screw you up, especially the ETFs and court cases and blah, blah, blah. That's all just everything's in the charts, right? I do believe that everything is already in the charts, baked in. Reason being because there's a lot of over leveraged banks, everything else, companies, everything gets crazy with the markets. So it's like the same thing happens over and over, right? Let's take a look at the 4 hours. So this is my possible count here as an Elliott wave. If we have topped here, which I believe is a good possibility, this was wave 2. We're looking for wave 3. Now, where will wave 3 go? Well, if we put the Fibonacci extensions on here, right, and we go from the top of wave 1 to the bottom of wave 1 up to wave 2, that gets us right around 13.7 for the 1.618, but that doesn't mean it has to stop there, right? It could go a lot lower. But that is your first level to watch for wave 3, if this wave 2 is already top. And then you would expect a wave 4 up and wave 5 down. We'll take a look at that as it goes. We'll keep you updated on it. BNB, as you guys know, we've been bearish on this for a long time. I was telling people to get out way up here. Our next level has been support a few times around that 202. Once that breaks, I'm looking for 153. Once that breaks, looking for around 69. If 69 breaks, I think Binance is done. We'll be seeing them in court like SBF, in my opinion, if we break 69. XRP, pump and dump, the classic pump and dump. Look at the chart. I mean, the chart says it all here. Tesla, as you guys know, we had called these lows 106 or 151, 106, and 149 2 years ago. We blew through our 151, and these were blue because I told you to watch for a massive bounce off of them, right? We got a massive bounce off this one. Nevertheless, I'm still looking for a $40 to $50 Tesla. We did get rejected at our trend line right here, as expected. Once we break down past, let's put a price label on there. So once we break down past this bottom trend line, and again, this moves, the trend line's going up, but once we break this trend line, it'll probably be pretty quick to the downside. And this just looks like a giant A, B with its C correction. And if we put the fibs on this one from the high, let's go from the high here down to this low and up to this retrace mark. The 1-to-1 extension would get us all the way down to the death of it. So anyways, it would get pretty ugly. But nevertheless, what I'm looking for here is more downside. As you guys know, we have our measured moves, 198, or I'm sorry, 40 to 50 bucks. I'm still looking to be a buyer there. If it never gets down there, then I won't own it. I don't care. There's plenty of opportunities in the market, but that's what I'm looking for. And as you guys know, gold, I've had a very long-term target. We had a triple top here, but we've called this 5 waves a few years ago. We've been looking for 1565 in the best case scenario, 1424, and if those break, guys, we got way lower targets. It all depends on what these traditional markets do here. I believe it is much more to the downside. So let me know what you think in the comments below. Don't forget, smash that thumbs up. Leave your comments. Subscribe to the channel if you haven't already. And check out these videos up top. I will see you in the next video. Have an awesome weekend, guys. I forgot to say in the beginning, happy Friday. Put happy Friday in the comments if you made it to the end. Take it easy, guys. I'm out.